I'm Dr. B, and yes, I'm a real ER doctor. So you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Welcome to the Market Pulse. I'm Dr. B here at Verified Investing, and today we're going to be talking about trends, how to identify in which direction the trends are going. Let's get to the charts. All right, so the first chart we're going to talk about here is Bitcoin. And obviously here's the price action, but this big red line is the 50 simple moving average. And in general, what you look for is you look to see, is the price above the 50 moving average or is the price below the 50 moving average, okay? That tells you very simply if the stock is in an uptrend, stock, crypto, commodity, whatever it is, if it's in an uptrend or in a downtrend. You can see Bitcoin right here. Okay, this is the 2021 run, and you can see that Bitcoin here is above the 50 moving average, and sometimes what happens is it will actually act as support or resistance. Okay, you can see here that Bitcoin was in a strong uptrend, came all the way back down here, was support right here, and then look at what happened here. It broke down from the 50. This was basically a bearish retrace and a pierce, okay? And this became then resistance, okay? And then you can see the big fall. Look at how Bitcoin was below this 50 moving average, obviously in a downtrend. And then look at what happens. Okay, as soon as Bitcoin breaks up above this 50, look at this, now in an uptrend, okay? So you can see that all the way across, okay, for years on Bitcoin's chart. Now, it's not as clear on some charts, okay? If you look at, for example, Walmart's chart, it's not as clear as Bitcoin's chart was. Whenever you have, a stock, crypto, commodity that's really significantly above, like here you can see on Walmart's chart, this is a strong uptrend. However, when you have the price chopping around this 50, it's very difficult to get an edge. Okay, so really what you're looking for is stocks, cryptos or commodities that are, strongly above this 50 or strongly below the 50. That tells you the general direction of the trend, all right? Let me show you the S&P 500 here. You can see the S&P very clearly here is above the 50 moving average, and this is a great example of how the 50 actually acts as support. You can see coming off the COVID lows down here, the S&P was very strong. You can see it pierced the 50 here, pierced it again right here, and then essentially stayed above it through pretty much the entire run here for 2021 and 2022 before it started to fall in early 2022. Here's a couple pierces here, couple pierces, right? But in general, above the 50 moving average shows you that the trend is up. Here's a pretty big pierce right here. I think this was a fake out, all right? You'd have a lot of people shorting right here, hoping that it would go down. It reversed, again, came above the 50, used this as support before the final breakdown right here. And again, you can see it's not perfect, right? No indicator is perfect. You can see a bearish retrace here, but then also a pretty big pierce there as well. But in general, when the price is below the 50 MA, you see a downtrend, all right? Here's the downtrend, all right? As soon as it reclaims it, right here, here's the uptrend, all right? Here's a pretty strong uptrend here as well, all right? But as soon as it reclaims it and then stays above, okay, this is the last time that it broke down below the 50 until about 450 on the S&P here in mid-2023. And then again, it broke down here. And then look at this, right? When it broke above here, it stayed above the 50 for several months, and it, basically was a strong uptrend. Currently, right now, we're just above the 50 MA on the S&P. And the question is, does this double top right here cause a breakdown from the 50, maybe a little retrace to the 50, and then a move lower? Who knows? Very, very interesting. It will be very interesting to see what happens. The Tesla chart is another example of how there can be a lot of chop around the 50. You can see the chop here. Give me 1 second for this to load, but you can see the chop right here all around the 50 moving average, whereas in this case, during the 2020 and 2021 run, you can see it was definitively above the 50 MA. And then look right here as well, really it acted as support here, here, and here, okay? In terms of other areas where it was definitively above the 50 MA, you can see this area right here. Price came up, basically sat on the 50 MA, used this as support, and then made a big run up. You can see it's very extended from the 50. In general, the 50 MA is kind of like a magnet. Price always will get back to the 50, whether it's to the upside or to the downside. In other words, if price is above the 50, it will always come back to the 50. If it's below the 50, it will always come back up to the 50. So it's somewhat of a watermark, line in the sand for stocks. Whenever you see big runs like this and being extended high above the 50, you know that at some point this is going to come back to this 50 moving average. All right, the 50 moving average is generally a shorter time frame average compared to the 200 moving average, right? Just so you understand, the 50-day moving average is the average price over the past 50 days, whereas the 200 moving average is the average price over the past 200 days. Okay, so that's very important to understand. This is a chart here on Hershey, and you can see that Hershey, this is somewhat of a difficult chart or stock to trade using the 50 moving average, just because there's so many different pierces of the 50. All right, so you can see that we did have a definitive move up above the 50 right here during this time frame. It was actually support right there, but there's a lot of choppiness here. This is COVID right here. A lot of choppiness around the 50. You can see this was support on the 50, but again, just a lot of choppiness where if you had stop losses below the 50, you would have been stopped out several times here. So it's difficult. You have to develop your own strategy. You can see here that the highs of Hershey, you can see very clearly it broke down from the 50, came up, perfect bearish retrace, and look at this, staying below the 50 for quite a while, comes up to the 50, another bearish retrace, and then it stays above the 50 here. Again, chops around, very difficult to trade this. So why is this important to know and to incorporate into your trading? It's important because, say Tesla, for example. All right, let's take a look at Tesla's chart. Let's say that you're trying to decide on a trade for Tesla. Are you going short? Are you going long? Let's say that we are right here in Tesla's chart. And again, these are daily candles. So I'm going to zoom in a little bit so you can see what I'm talking about. All right. All right. So this is the most recent run on Tesla. Okay, we're down here around 140. We broke above the 50 right here around 170 and then stayed above and ran almost to 280. Huge run on Tesla, almost doubled the price from the lows here end of April. So why is this important? Let's say that all of a sudden you notice that there's this bull flag forming on Tesla and you're above the 50 moving average. And let's say it breaks out right here from this bull flag, and then you have a day where it pulls back. And here's your red day. And let's say you're swing trading this. Well, what you can do is you can enter here on the pullback knowing that Tesla is in an uptrend, and you can put your stops below these pivot lows right here, either this pivot low or this pivot low, okay? And you can say, okay, most likely because Tesla has broken out above the 50, if I go long here, we're likely to see more movement to the upside, and that's exactly what happened. You know, you could have sold here on a gap up, here, this gap up. You're usually not going to catch the perfect tops or the perfect bottoms, but sometimes you will. In general, you're looking for the meat of this move, and so using the 50 moving average to identify the overall trend will help you understand which direction you should be going in these trades. So it's, you know, these are all different strategies. This is a trend following strategy. We do and practice a lot of mean reversion strategy here, but you know, we've talked about this before with Jim Wyckoff. He came on the show talking about trends and trend following, and this is just one different way that you can use the 50 moving average, you know, to your advantage. So very good. I hope you enjoyed that, and you can put it to use in your trading. Thanks so much for watching. If you haven't seen the previous episodes of the Market Pulse, go back. There's about 30 episodes at this point. I give a lot of detailed education and teaching from my years of experience in the stock market, and we talk about all sorts of nuances that should help you profit in the market once you learn and practice these over time. I am developing and have developed strategy surrounding VWAP and trend following. The 50 moving average does help with this. I will be coming out with a course on VWAP, volume weighted average price. This is what the institutions use to buy and sell and place orders in that area. That will be coming out very soon, and the 50 moving average will be part of that course. So I'm looking forward to releasing that in the coming weeks and months. So I hope you enjoyed that. I'll see you next week. Take care.